And we're live. Hey guys, welcome back to another cracking installment of the Matt Brown Show. Today, I'm very pumped and thrilled to have with me none other than the founder and CEO of Wealth Migrate, Scott Picken. Welcome to the show, dude.
Awesome, Matt. That's quite an introduction. It's awesome to be here. Thank you very much.
No, anytime, bud. So apart from like jumping all over the world in Sydney and then in the US and the UK and just basically being a proper globe trotter, what is the kind of headline backstory here? Why are you doing all of this? What's the story around Wealth Migrate, the backstory?
Sure, I could give you the short version, I'd give you the long version. The short version in simple terms is that I believe that everyone should have the opportunity to be able to invest in property. And to give you some startling statistics, only 49% of the world's wealth is held in property. And yet only 12.9% of the world's population actually has access to property. And so we sat back a while ago and we were like, well, those stats are ridiculous. And why can't we help the 99% invest like the top 1% using technology? And I could give you a whole long journey as to how we got there and what we did. But at a personal level as well, my father did what we were all taught to do. And everyone that's just cheered probably was taught the same thing as well. Go to school, go to university, get a good job, invest, pay your taxes, plan for retirement. And yet my dad was a financial director of a listed company here. And when he died at the age of 59, he died broke. And so at a very personal level, I decided that the system's completely broken and I need to do it at a different level and hopefully inspire others that there's another way.
This theme of financial independence comes up quite often, at least in my world, because it is something that very few actually attain. It's Q put out this post the other day. She runs all the social for us, and she put out this post saying, like, you can spend your entire life climbing a ladder only to find that you climbed to the top of the wrong wall. And it's an interesting way to kind of really contextualize what you're saying, which is around, well, what do you do with your money? And
if you take my dad, his ladder fell over. It wasn't even up against a wall.
Yeah, someone just came along with some chainsaw.
Exactly.
That's where it went. But look, I mean, my old man as well, made a lot of money, lost a lot of money. It's a funny thing. And what you don't want to be is in that situation where to your point, the ladder was taken out from underneath your feet, right? For whatever reason, and life just happens to do this to us for some reason. I've lost businesses, broke as fuck, just really, really, that sucks ass. And obviously sold businesses as well. So it's kind of like it's a lottery ticket in many respects.
Look, I think that the challenge is that the way you're speaking is more around life's events and stuff that happens. So good things happen in business, you make some money, bad things happen, you lose some money, etc. What I think is really challenging is that if you look at the stats, every single person out there is trying to work hard and make money and ultimately be financially independent, whether they'd like to admit it or not. And yet at the age of 65 in England, Australia, and America, less than 1% of people will retire wealthy at the age of 65.
What does wealthy mean in your world?
Well, so no, this actually so there's two different ways you can frame wealth, okay? So when one looks at purely money, okay, that's more around passive income, and where your passive income, so you don't have to work, and the money you get paid is more than your expenses. That's what financial independence is. I believe that wealth is much more than that. In fact, a lot of people say that wealth is actually what you have when you don't have any money. So it's about your relationships and who you are and, as a person, your friends and your family and everything else. But coming back to that 1%, let's just keep it purely on money for now, not the broader context of wealth. I think that it's ridiculous that all of us, across the world, and again, it's worse in the emerging world than in the first world, are aspiring to something and less than 1% of people are achieving it. There has to be something wrong.
Well, what is wrong with it? Is it skills? Is it knowledge? Is it just chance? Do you believe in luck in this space?
Look, I think luck does have a part to play, but there's no ways that the stats could be so badly skewed if it was just down to luck. I think it's two things, actually. I think it's our education system. I think our entire education system is flawed, and that we're taught on how to be workers, basically, 20th century workers. The education system hasn't changed in 200 years. And the second thing is the financial industry which is the second biggest industry in the world after oil, is basically set up to train people that they don't know what they're doing, so they must give their money to another third party, and that third party will go out and look after them in their long term and their retirements and everything. And the real truth is they rape them with fees, and no one ever retires wealthy. And that's why the stats are so stark. So I don't think it's down to luck, quite frankly. I think the entire system is engineered against people.
So the rich keep getting richer, basically. What about everyone else?
Well, the rich keep getting richer not because of the system. The rich keep getting richer because they invest in better assets.
But is that so? Is it so? There's two things for me. Is it purely access? It's like if you take historically, if you look at property investing, right? So when I lived in London for 7 years or whatever, I started to get into that space. Obviously, the London housing market is just huge. And so it was all around, education and then access. So if you could afford a £1 million down payment, fantastic. But in a boom market, the strategy was very simply this: is borrow as much as you can, and then wait for that to hit your ideal.
I bought my first
return.
London house on a credit card, but yeah.
But do you see what I mean? But there you go. But it's because it's the Me Too and the FOMO thing, But that's the thing. It's about access to capital. So if I've got 10 million, and you've only got £1 million, then I'm going to make 10 times more money in the same market, right? So the richer keep getting richer. That's the working premise, right? What you're doing with Wealth Migrate, from my understanding at least, is kind of flipping that all around and giving the ordinary investor, so from as low as $1,000, then 10,000, 100,000, I think it goes upwards from there. But you're giving that type of investor who doesn't have like 100 million to put down, right, access to some of the best property investments, so that in the inevitability of property cycles moving up and then consequently down, in the boom markets especially, you're looking at getting a return on that as low as $1,000, right?
Yeah, let me give you a real life story, which I think will explain it a lot better than a contextual story. So I was in London just like you. I lived there for 9 years. And at about the age of 25, I realized I'd be the world's worst employee. And so I resigned and I set up a company called IPS, International Property Solutions. And we basically help people invest into houses or apartments in England, Australia, America, and South Africa. We helped about 2,500 people do that. Now, I have an undergrad degree, honors undergrad degree, a master's degree from London, and I did pretty well in both of them. And what was amazing to me was in 2009, I met two US dollar billionaires. I was in Bondi Beach, Sydney, and ironically, it was 10 years ago this year. And I said to them, what are you investing in? Now, we just had the global financial crisis, and everyone was running around, quite frankly, shit scared and didn't know what to do. And I said, what are you investing in? They said, medical buildings. Now, before I go any further, Matt, do you own a medical building?
No,
or a piece of a hospital?
I sold
or
my
anything?
portfolio.
This is the point. Like, it doesn't even come into your paradigm of like possibility. And so I sat there with these guys and I was like, well, why medical buildings? Again, take all my, supposed education I'd received, and I'd helped 2,500 people buy houses and apartments. And they said three things to me that just made perfect sense. I said, think about it. No matter what happens in the global economy, people will always need doctors. It's like, okay, that makes perfect sense. Secondly, doctors never leave their premises. So I thought back to when I was a child and I was like, that's true. In my case, my doctors unfortunately passed away, but the premises in Kloof, where I grew up, are still medical premises. And thirdly, doctors are bloody good at being doctors, but they're not accountants. So they sign very good, favorable long-term leases. And I remember sitting there thinking, this is like a no-brainer. Like, if you think of it from a property investment perspective, it's an absolute no-brainer. So I said, well, guys, that's great. I want to participate. And they said, no, it's great. There's 8 slots. It's 5 million Australian dollars each. We're raising $40 million. And I was like, there's the catch. There's the problem. And anyway, I didn't have 5 million Australian dollars. That company today is on the Australian Stock Exchange. It's listed. It's worth $700 million. They started with 40 in less than 10 years. And that's really what financial exclusion is all about. And where Wealth Migrate came in, we said, well, that's ridiculous. Why shouldn't we, through using technology, allow people to partner with people like that? And rather than investing $5 million, invest $1,000 or $10,000, etc. So to come back to your point, it allows people not only the access, but it also allows them to partner with people that have the skills in that sector. Because again, you and me try to go buy a hospital tomorrow, we're probably going to make a mistake. But if we're partnering with people that have been doing it for 10, 20, 30 years, it's going to make a significant difference. And the third thing that it does is that people are now not only included, but they learn while doing. So, I now give my brother my brother's an anaesthetist, very intelligent guy, 40 years old. He's been putting his money away into these retirement plans, whatever. But he loves the fact that he can actually go and invest in actual deals. So again, not just a fund of funds, but actual deals, and learn while doing. So like he starts to learn, well, what is a medical building? How does a medical building, how is that different from a multifamily or an industrial building or whatever? And I believe that knowledge is, a lot of people say knowledge is power. It's applied knowledge is power, which is really important. And so it's quite a long story to contextualize what you were saying. But that's why I believe the rich get richer, because they get given better knowledge and they get given better access. And now with technology, everyone can participate.
What did you do with IPS? Did you sell that?
Yeah, so I actually sold IPS and into a group of companies. It's still operational to this day. So it's still helping people because there's still people that want to invest in London and England, Australia, etc. And I'm still very passionate about that space. However, what I'm more passionate about now is actually helping people, because once you've been in commercial property, no billionaire has ever become a billionaire by investing in residential property. It's a middle class investment. That's a fact.
Yeah.
And anyone that has managed to get into commercial, and there's 1,000 reasons why people haven't, but anyone that has generally wants to then get out of residential. And I personally, having been involved in commercial now over the last decade, it's really quite exciting. But again, you should be diversified. You can have residential, you can have commercial, etc.
Tell me something. Can you give our audience a sense of scale? So how many investors do you have across the number of countries? I think it's over 100 now, right?
Yeah. So we've got members in 129 countries. There's only 193 on the planet, so it's a fairly good portion of the planet. What's quite exciting is we've only actually done marketing, and I mean, I'm sort of talking in the haven of digital here. We've only actually done marketing in South Africa and China. So when you consider there's 127 other countries that have found us, it's quite exciting. We've done over $520 million worth of deals through the platform, and we've had about $85 million go through the platform, actual physical cash through the platform, and we've paid out now nearly $9 million in dividends.
Wow,
income return.
And then
because we need to talk about income, because when it comes to wealthy people, it's actually income that's more important than capital growth, but that's a separate conversation.
Well, let's go there after this. But how do you guys make money? I mean, let's just say Maverick here wants to put $1,000 into your platform versus say myself who wants to put $100,000 in. Like, how do you guys make money? Like, what's the fee structure? What do we need to know?
So the good news is the difference between you and Maverick, whether he puts in 1,000 and you put in $1 million, you still get charged the same thing. So it's not one of these things where there's higher fees for lower investment amounts. Our fee structure is actually very simple. We basically have modeled it on Airbnb. And why I say that is that I've been using Airbnb for quite a long time, both as a supply and on the demand side. What I loved about Airbnb is it was simple. Their fee is 3%. If I rent out my room for $1,000, I basically get $970 as a supply person in my bank account. It's really clean, really simple. So our fee structure is never more than 3%. And, when it comes to property and real estate and funds and private equity and REITs and real estate investment trusts, they love a very complicated language. They talk about waterfalls and carries and IRRs and quite frankly, stuff that no one has any idea what they're talking about. So we were in that space. And we decided that we were probably losing more clients because it was too complicated. Because if I talk about an 8% hurdle and we're going to have a 25% carry over an 8% hurdle, the guy's like, dude, what are you talking about? Like,
what's that?
Exactly. Which means you've lost the person, So now when we come back to Maverick and we say, listen, Maverick, at no point will we charge you more than 3%. And we take a small fee on the front end, the middle during transactions, and on the back end, and it ranges between 1% and 3%.
So let's talk about why should I invest in property at all? I mean, I think it's an interesting one because I'm doing a whole bunch of research into equity crowdfunding, for instance. So if let's juxtapose those two options. So I don't have, £1 million or $1 million to put away. I've just got something I want to play around. My play account, you know what I mean? The wife's not going to give me shit about dropping $1,000 or whatever. So I've got some options. Option number one is to look at property as a category of property investing. And then the other option is to look at technology startups. So for instance, you could go to Seedrs, seedrs.com, I think it is. Also UK, I believe.
We just did a campaign on Seedrs. We raised $2.5 million on Seedrs, yeah.
Really?
Yeah.
Well, there you go. See? So it's the same thing. It's like, well, I can put $1,000 into a technology scale-up sort of opportunity. Obviously, any investment goes at risk across both categories. So my question very simply is, why property? What are some of the key things one should consider around property? Put my $1,000 into a property deal versus, say, a technology play? Well,
look, fundamentally, I think they're completely different, actually. So, if you invest in an Uber or an Amazon, you're gonna 10x it, 100x it, 1000x it in terms of your return. So your $1,000 can become $1 million, in a technology or in any startup for that matter. Necessarily, obviously, a technology is better. The problem is that statistically, 96% of all startups fail over a 5-year period. So the odds are seriously against you. You probably got more chance on Seedrs if you invest in one of those brewing companies, and you're at least going to get beer as dividend as well. But my point being is that I think it's really tricky to pick a winner. Because when it comes to business, there are so many things you've got to take into account between the team, the idea, the market, regulation, execution, everything else. And I mean, just by the way, an idea is fantastic, but execution is everything. Anyone can have a good idea. It's ridiculous. Even if you look at Uber and Lyft, I mean, the one is materially bigger than, I don't know how much you've been reading about the IPOs that have been going on at the moment. And they both have the same idea, but one just executed on it so much better than the other one, arguably. So that for me is the one context, okay? And that's a very different investment class. If you take property, by the same token, unless you live in Zimbabwe, you're not necessarily going to just lose the property outright.
It's not going to go away.
It's not going to go to naught.
Yeah.
So property goes down by, in America in 2008, 2009, it went down in some states by 40% in the residential market. So it could go down by 40%. It could go down by 50%. The worst in South Africa has been a drop of sort of 20, 30%, which again, if you take statistically around the world, even the banks, they'll tend to lend at 70%, 80%, because they know that really it takes a lot for it to drop below 20 or 30% off that value. And so your downside is a lot more measured, but so is your upside. It's also not going to 10x. If you put $1,000 into this building that we're sitting in, over 10 years, it's going to go up in value, but it's not going to 10x in 5 years' time. I guarantee
it's a
long-term value. So, I had the privilege of writing a book, Property Going Global, that was endorsed by Clem Sunter. And Clem Sunter, I believe, summed it up one of the best ways I've ever heard, is that you should look at investing, putting stuff in buckets. So you've got 1/3 of your money in the stock market, 1/3 of it in property, and 1/3 of it in cash, as an example. I'm just giving you an example of buckets. I'm not saying it should be those.
This is not financial advice.
There's no financial advice. I'm just trying to give you the example of the bucket idea. And again, I think that, go on Seedrs and invest in a tech startup and have fun and be part of that environment and learning and, what that's all about, and invest in property. But don't do either or. I think you can now do both. And where I think life gets really interesting is that with technology, this wouldn't have been a conversation we could have had 10 years ago. Because with $1,000, you couldn't do anything in property. I mean, you could buy a post box and that was it. You know what I mean? And you couldn't put $1,000 into a company either. If you went up to Uber, 10 years ago and said, I want to put $1,000 in, they would just laughed you out the door. So what I think is getting exciting now with technology is that the accessibility. I mean, easy equities is here. You can get in the stock market in a very small amount of money. So what I think is really exciting for us, all of us nowadays, is we can put a small piece of money into different buckets. We can learn while doing. And we'll, over time, start to get a feel as to what we like doing as well. Because I'm a big believer in do what you enjoy doing. I love property. My uncle loves the stock market. He's been very successful in the stock market, but he hates property. I've done fairly well in property. So, but I don't understand the stock market. And so I think also tend to find stuff you enjoy doing. So if equity crowdfunding and startups is your game, great.
So why did you raise or do a raise on Seedrs?
So it's an interesting one for us. So we started the company, and in 2014 we launched a concept called Wealth Partners, and I basically copied the concept from Salesforce. I don't know if you know the company Salesforce.
Yeah, Mark
Benioff.
Benioff.
He's got a great book called what's it called now? I'll remember it. Anyway,
someone Google Mark Benioff's book.
Yeah, it's a great book. I'd highly recommend. And he spoke about it back in '99. He went to all the venture capitalists and he said, "Hey, we need to raise capital," and they laughed him out the door. They said they're never going to. I don't know how much detail I need to go into, but CRM, customer relationship management, they're never going to allow that to go in the cloud. It's never going to happen. They'd never heard of SaaS. They invented SaaS, and so he said, "Well, let me go to our clients. Our clients believe in what we're doing." And they basically raised this, and they called them design partners at the time. And I love the concept. They got the cash. They got people like that had a vested interest in seeing them succeed, so that helped them build a better platform. And thirdly, when they did succeed, they all won together. And and I've got a huge amount of admiration for the Salesforce story, not only on the profitability side, but also on the purpose side. And so in 2014, we launched our concept of Wealth Partners because we had the same thing. We had our clients coming to us and saying, "Listen, we like this building. We want to invest in this building, but how do we invest in the platform?" And we're like, "That's not an option." However, growing a tech platform is very expensive. Your income doesn't keep up with your costs, and so it was getting a little bit expensive to capitalize the thing from a personal perspective. And then the third thing was I loved Behind the Cloud.
Behind the Cloud.
Yeah, Behind the Cloud by Mark Benioff. I highly recommend that. It's one of my top books that I would recommend reading.
So it came out it was in October. Is it 10 years old?
Yeah, it's ages ago. Yeah.
Oh wow. Okay, cool. Yeah, they love the story. It's awesome.
It's a fantastic story. I highly recommend it. And so we launched our wealth partner concept in 2014. We had 140 wealth partners from around the world. We'd raised about $12 million. And that obviously helped us grow the company to where it is today. But most importantly, we've got this passionate community around the world that was really wanting to see us succeed. And so come along seeders and equity crowdfunding and everything else. And we've been looking at a bunch of platforms from all over the world. But there was no one solution that could help us do it at a global level. And again, if you've got members in all these countries, there's no point in trying to have the South African solution or the English solution or the American solution. And Seeders a year ago couldn't help us. Seeders 2018 said, no, we've now opened in 32 countries outside of Europe. So the whole of Europe and 32 other countries. We were like, fantastic, let's give this a go. Let's take our wealth partner concept and just extrapolate it. So we ended up raising $2.5 million from 882 investors in 43 countries.
That's incredible, yeah.
Yeah, so now think about that. So now we've got 882 investors in 43 different countries that all have a vested interest to help us succeed. So that's why we did it. And obviously the capital, the capital's valuable to keep growing the company. But it's more about the community. I mean, community companies are the future. And so that's why we did it.
Can you walk us through some of the pitfalls of equity crowdfunding specifically? So, I mean, I'm looking at that also because we're on an expansion path. So investment is a very attractive thing to be looking at least from our perspective. Equity crowdfunding is kind of knocking the VCs down the totem pole somewhat, or at least eating their lunch. And to your point, why wouldn't you have 800 stakeholders? Do you know what I mean? It's that's fucking
versus
awesome.
One guy who sits on your board and basically tells you wrong all the time.
I veto all your decision making. I want a 20 times return on my money in exchange for that. So, do you know what I mean? So it's a very interesting space. And then I spoke to a guy called Luke, forget his surname now. He runs something called Integrate Me. I don't know if you know. Have you heard of them?
Are they in America, aren't they? No.
There's another brand in America, but they're becoming a data company. So if you want to redo your car disc licenses or whatever, you use their app and it's all done for you, whatever. And you can store your South African ID, your ID book, your passports, all that kind of stuff. They're a data company essentially. And they've been literally now, he phoned me last week, but they're doing a raise now through Uprise Markets here in Joburg. I don't know if you know them. Tabs
I know them very well,
So, I mean, exactly. So, I mean, so it's literally so new, like it wasn't even legal 12 months ago, but now it is. And so Uprise Markets, and I said to him, well, how much are you looking to raise? And he was like, no, about 20-30 million. And I was like, cool, no problem. They're going to run a 60-day campaign. And then I said to him, well, what should I consider if I'm looking at different markets like the US or the UK, for instance? And so he was like, well, I wouldn't raise locally, which is interesting. And then I looked at like Equity Zen, I looked at Seeders, I looked at quite a few others. What do we need to know about, if let's just say, use me as an example, right? I'm a tech founder and I'm looking to scale. I've got product market fit and I need some capital. I'm not interested in VCs. What are some of the things I should be considering around where to raise money, what platforms, that kind of stuff? I know it's a very big question, but just start.
No, fair enough. So look, I think we need a lot more than an hour, but let me think through how to contextualize that as quickly as possible. Firstly,
or even if you could share maybe your approach, like what did you do?
No, perfect. Case? So the first thing I'd recommend is reading a book by Peter Diamandis called Bold, and specifically reading chapter 8, which is how to run a crowdfunding campaign. Okay, and
what about Tim Ferriss's blog post?
He's got a good one, but seriously, Peter Diamandis is one of the he started Singularity University, and he's one of the biggest proponents of equity crowdfunding in general, and he's also got a fairly good track record in doing it himself.
Chapter 8.
Literally chapter 8.
Okay,
I've recommended it so many times I even know what chapter it is, basically. And so that's where I would start, okay? And I'll tell you why. It's the best playbook I've found on how to run a campaign, how to go out, how to find your platform, how to build your team, how to build your community, how to get your PR ready, because it's not just about putting on a platform and hoping that people turn up. It's not, build it and they'll come. It doesn't work like that. There's a whole game plan. The second thing you've got to do, and coming back to the conversation your friend had, is you've got to decide where do you want to play. Okay, because if you go with seeders, you can't raise from any South Africans through the platform. That don't allow it. Okay, if you go to Uprise, we consider going to Uprise. I actually tried to get Uprise and seeders to work together myself. Myself and a guy called Kevin Allen actually started the Crowdfunding Association, African Crowdfunding Association, in 2015.
Who are you?
So, because I'm quite passionate about this space, and dealing with our regulators here, they haven't really embraced crowdfunding, and they're still trying to get their heads around it, etc. And so, when it's all good and well to go to seeders, but then do you know anyone in those markets?
No.
Okay, now it's really interesting. So the way seeders work is that they tell you need to raise 50% of your capital. As it worked out for us, 80% of our capital came from our own community, and 20% came from their community.
When you say your own community, do you mean
from your own community that you've already got?
But living in the UK,
living anywhere in the world,
except South Africa.
Well, for us, we did it. We did it through. We still provided a mechanism for our community to be able to participate, but not through the Seeders platform.
Okay? I see. Okay.
Basically, in an offline environment.
I'm with you. Okay.
But I think what I'm trying to get at is that if you want to be successful at equity crowdfunding, you have to have a community. Now, you guys have one already, so that's fantastic, okay? You then need to say, okay, well, how am I going to make it easy for my community? Okay, because if you go on Seeders and 98% of people are here in South Africa and you have to do it all offline, then it's a lot more difficult. If you go to Uprise, that's great, but then they're only South African. Did you see this is the challenge, what's the word called? Quandary we've been in for so many years, because every time we were boxed into one place. We finally went with Seeders. And the reason we went with Seeders was because they had the most broad-based approach out of everyone that we found, out of England, America, Australia, Singapore. I could put you in contact with anyone you want to know, and all the different ones. In fact, in South by Southwest, which is the big tech conference in Austin every year, I was on a panel with the guys from Crowdcube, which are Seeders' competition. And one of the guys from one of the big American platforms, and I started the conversation going, why are you guys not working together so that if we do a crowdfunding campaign, we could actually have a joint solution? It still doesn't exist yet. Seeders are your best option to look at a global solution. And then the third thing I would say to you is that quite frankly, I would just go and do it. It's quite publicly, you're putting yourself out there because you can publicly fail. But what you're going to learn is incredible through that process, and I believe you can only grow. And so lowball your number.
What do you mean, like?
Well, if you want to raise 20 million rand, to use your friend's example, aim for 5 and get 8, then to aim for 20 and get 16.
I hear you. Let's talk about learnings. I mean, what would you do differently about your specific engagement with Seeders, or maybe the campaign around your crowdfunding initiative?
Sure. What would we do differently? Look, we literally just closing it out as we speak, so we haven't even had the time to sit back and go, how could we do it? What could we do differently? But if I think about it, the whole thing, they will tell you it's going to take 60 to 90 days. We started in August last year. and we're in April this year,
It's like 6
and
months
it's still
in.
closing out now. Okay, so again, if you read Peter Diamandis' book, he'll tell you it takes 6 months
At least.
at least. Okay, 6 to 9 months. So the first thing I would recommend to everyone is it's no quick fix. The second thing I would probably try and do is more planning around it. And what was very difficult with Cedars, as an example, is knowing what they can or can't do. So it was very ad hoc. It was like they felt like they were learning while we were learning, if that made sense. And so you were basically turning up, use any sports analogy in the world, whether it's soccer, rugby, cricket, I don't care. And we were on the pitch and this ball was flying around and you were trying to figure out the rules while you were playing. Like someone tackles you and you're like, what? And then you're like, oh, okay, we're allowed to tackle now. It was that sort of thing. So, but again, I maybe it would be having a mentor who's done it already take you through the process. I don't know.
Are you offering?
But I'm happy to help.
Emails would you like?
Happy to help you, Matt. But no, but look, I do think if we'd had someone, and there's a guy I know called Simon Zutsky that had done it, and I did reach out to him a few times, and he did give me some pointers. But there's so much knowledge from people that have already done it. That is not in books or magazines, and the likes of Cedars don't even tell you how to do it.
Chapter 9?
Chapter 9, don't joke. Look, I still maintain that Chapter 8 is the best playbook I've found. And I mean, really read that in detail, make your notes, because that's what we did. We read that in detail, we then created a game plan from that. And then...
And do you get all your money out straight away, or is it tranched? So that, let's just say you hit your 2 million raise. Do you get that? Here's your money. Cheers.
So again, every platform's different. In Cedars' case, you close out and it only is all done at the end and you get paid, unless investors invested directly into your bank account.
And could you describe some of the differences between equity crowdfunding and just crowdfunding?
So there's 4 different types of crowdfunding. And equity crowdfunding is the hardest. You've got donation crowdfunding, which is most people know, even funded by me or any of those type of things, where your mate wants to run a race or their mother's sick or something, and you can just donate. Then you've got rewards-based crowdfunding, which is where people can invest in they put money down and they get rewards. So even the brewers, that's how the brewers did it to start off with. They actually raised money and your return was beer. It wasn't dividends, basically. The third one, what's the third one type? You've got rewards, donation. I've forgotten the third one. And the fourth one is equity. And equity is the most complicated because that's actually where people are actually investing in your business and owning a piece of your business in terms of that process.
That's a bloody big challenge though, right? Because even if I'm talking to like a highly astute decision maker at a big tech company like Microsoft or First Distribution or whatever, there's a big education job that goes along with, well, what exactly does this company really do? And is this the best alternative to put my $1,000 into versus the other 100 that are listed on that platform? So marketing, I imagine, is a big deal. And then also the education components on top of that, right? So, and especially in your case, I mean, you've got blockchain running, you're operating in different markets. It's like, well, you got these different property indices that are listed and blah, 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 blah. And so there's like, in a B2B space, there's like apparently 17 different touch points that are required before someone actually says, cool, let's meet.
Yep.
Let alone like actually transact with you. So how did you approach that? I mean, any technology initiative such as yourself, like Wealth Migrate, is complicated by nature. How did you approach the education job to get people to actually bank with you versus, say, other crowdfunding projects?
Well, I think I'd answer the same question in 2 different ways. And how I'd answer it is there's a fancy term called education-based marketing. And
Can someone write that down?
I'd never even heard of that. But the point being is that when I started our International Property Solutions, IPS, in 2004, I basically put an ad in the South African, which was a newspaper in London at the time. You probably read it when you were there.
Which one was it?
You had the SA Times and the South African.
Yes,
there were 2 newspapers that all the expats read. And I basically said, right, I'm running a 2-hour workshop on how to invest in England and South Africa. 120 people turned up in Putney, and we sold 16 properties the next week. And that's how we started. So our entire business has always been education. How do we teach people? How can we, so whether it's live events or webinars or, digital journeys or anything. So that's the basis upon which we've come from. And that's how we've educated people. Just today, I educated everyone listening on why they should invest in medical buildings. Now, whether they run out and invest in medical building or not, they're probably not going to. But I tell you what, there's going to be this irking little feeling in the back of their head going, shouldn't I be maybe thinking about one of those medical buildings? And at some point, they should invest in medical building. But that's the point. Coming down to your question of an equity crowdfunding, it was the exact same story. You had to build a journey. You had to explain the big picture why. Simon Sinek says it so well, the golden circle. Start with the why. Why are you doing what you're doing? What's the big picture purpose? Then you can worry about getting into the how and the what. And we, from our perspective, we built that through a digital journey. We had multiple webinars. And we just tried to communicate. All the typical crowdfunding stuff. You build videos and everything else. I don't know if we succeeded. As in, I believe what we're trying to achieve, thousands more people could have participated, and I wish we'd reached more people. Is the honest truth. So it's really just trying to get the message out there and standing up above the
clutter.
The clutter.
Yeah, exactly. Can we talk blockchain as a technology for a second?
Yep.
So there's two schools of thought. One, you can't put anything non-financial onto the blockchain. Obviously, then there's the other school which says, well, blockchain is only built for financials. So what's your view? I mean, you've got transactions sitting on the blockchain. Where's your head at? And in terms of wealth, what's Wealth Migrate's point of view on blockchain technology, and how are you going to be, maybe not, but how are you planning, and if so, like with regards to blockchain technology adoption, like how do you see that evolving or scaling up or ramping up adoption for investments?
So can I answer that again? I want to answer that in two different ways. So the first one is blockchain full stop. And where are we at with blockchain and what impact it's going to have? I see blockchain very similar to the internet. Okay, so you go back to 1995 and you had the dot-com boom, you had the dot-com bust. But today, companies like Amazon, Uber, Airbnb are materially changing the way we live. I mean, everything we do on our cell phones and everything else. And yet when I catch an Uber, I don't say to someone, I caught an Uber on the internet. It doesn't work like that. I don't say I went shopping on Amazon on the internet. Do you see where I'm going with this? So when you had the dot-com boom bust, the bust, everyone said that dot-com is broken, the internet's broken, it's never going to work. And the problem was the business models were wrong. And great companies like Alibaba, Amazon, Salesforce, and many others, not only survived, but actually thrived. I believe blockchain is going to be a very similar pattern. Okay, there was a lot of hype around it. We've had the ICO hype, we've had the ICO crash, we've had the Bitcoin hype, the Bitcoin crash. And I believe probably 10 years from now, pretty much everything that you do will be on the blockchain. But you won't go around and say, I bought a house on the blockchain. You will buy it on the blockchain, but just like you buy something on Amazon on the internet, you don't say it'll just be the underlying core technology that's enabling it to take place. And for us at Wealth Migrate, when I understood blockchain, I don't know exactly when it was, 2013, 2014, it really opened my eyes because we've got two major challenges. Our first challenge is trust. So when I said to you, we were introduced by a mutual friend. But if I said to you, Matt, put $10,000 into a medical building in Atlanta, what's the first thing that goes through your head?
Can I trust the investment, right?
Yeah, exactly. Who am I? Can you trust the platform? Does the building even exist? Etc. And what does blockchain actually solve? Trust. You've got e-commerce and you've got social media, and they're coming together. They're forming social commerce. And social commerce is underpinned by a foundation of blockchain. It is the foundation. Blockchain is the foundation which will allow social commerce to take place.
Do you buy Facebook becoming a bank? Did you see that stink the other day?
Yeah, I've seen quite. Can I come? There's a second point. There's a second point I want to mention to that. I will come back to Facebook. So the first thing for us was we have to get our platform onto blockchain, because ultimately that can solve our trust issue. Because Matt Brown can go online and he can actually say, well, hang on, I do want to invest $1,000 or $100 or $10,000 or $1 million, doesn't matter. But when I own it, I know I own it. It's there, I can see it, it's on the blockchain, it's transparent, for all the good things about blockchain. The second thing is our aim, our passion is to get investing down to $1 per person per investment. Okay? Now, there's 3.5 billion people on this planet that live on less than $2.50 a day. And if you can get it down to $1, you truly can empower the entire 99% to be able to invest like the top 1%. People always say to me, if I invest $1, it's not going to change their life. It won't. It'll change their habits. But if you change their habits, you'll change their financial destiny. And I truly believe we can solve the wealth gap in our lifetime by doing this. But doing it with the current business model and the current fiat systems, it won't work. someone putting $1 in, there's too many friction costs, it just won't work. Whereas if you could have a cryptocurrency like a Bitcoin, which was backed by property that everyone understands, I believe that you could reduce the friction costs and allow participation at a global level. And blockchain will be the catalyst to enable that to happen. So that's the big picture of why we believe in where this is going. But it's a long-term game, not a short-term game.
Mm. You have to get the blockchain to scale itself, though, to get to that point. If you're going to have 3 and just 1 billion people transacting.
Yeah, so I think, this is where I think there's been big moves, and it's happened already in this last couple of months around security tokens. Now, remember, blockchain is the core. It's like currency is to US dollar. You've got the US dollar, and you've got currency. And for me, blockchain is more like currency. And the different tokens or coins or whatever are on Bitcoin, whatever, are on top of that currency. So yes, I agree with you that blockchain has to scale. Yes, I think there needs to be much better understanding and adoption. And do I think it's going to happen overnight? No, I don't. But I do think it's going to happen in the next decade. And I do believe more and more as the millennials come through, and my son who's 7, quite frankly, watching him play around on an iPhone is fascinating to me. No one has to show him how to do it. That generation, they are not take property. They are not going to go to an estate agent who deals with 16 different middlemen between you buying your house or selling your house. That's going to take 3 months with about 10% worth of costs to buy or sell a house. They're just not going to do it. They'll just be like, this is ridiculous. I can buy a book online. Why can I not buy or sell my house online? In a matter of minutes.
Yeah, well, exactly. I mean, I've said before on the show, like, my son will never have a bank account.
Yeah.
Why? You just have an app. Poof. To your point, I got this nagging question in my head, and I was like, do they need to trust the technology, or do they need to trust the proposition of property?
Yeah, so I think that, and again, this is just my own personal opinion. I can't prove this yet. I think that all over the world, people understand the value of property. Whether you're a goat herder in Africa, or a rice farmer in China, a bloody rickshaw driver in India, you understand the value of property. Whether you own property or not is a separate conversation, but everyone knows that saying, he who owns the land is king, and, et cetera, et cetera, et cetera. So I believe that if we can build a technology layer that is backed by an asset everyone understands, that there'll be intrinsic, want, if that makes sense. They're already using their mobile phones, and now they can get access to an asset they understand. It's much easier to understand than the stock market or even cryptocurrencies or different things that are a lot more difficult for people to understand. However, saying that, over the next 10 years, 20 years, it's going to be really interesting to see how that adoption will work, because everyone wants access to land. You just have to ask Julius Malema. But the question is, giving people land is not necessarily as valuable as them actually learning how to invest in it.
Facebook as a bank. I don't trust him with my data, so why the fuck would I trust him with my money? What's your view?
Sure, Facebook. So what's interesting from a business perspective, and I'm sitting here and you guys, this is an area where you should be lecturing me, not the other way around, but I'm noticing a material decline in interaction on Facebook. Full stop. Okay? And that's just me in business. None of my friends are on Facebook. Like, we don't use it in any way to socialize or anything along those lines. And the younger generation aren't using it all. So coming back to Facebook as a bank, I think they've got a massive platform around the world. I think they've got a very solid brand that people understand. And I do believe that more and more people are starting to trust the Amazons, the Facebooks, the et cetera, more than the bank down the road, quite frankly. So I believe there probably is an angle in that space. But when it comes to platforms in general, I don't know. I just find there's too much noise at the moment, and people are really battling to find out how to engage. Now, when that comes to their money, there's a great story that I heard at one of the crypto conferences that I was at last year sometime, where, the problem with crypto is that if you suddenly lose your bloody key or something, there's no bank to go into and say, listen, dude, I've forgotten my password. Can I just have my coins back? Like, it's gone. Yeah. Try and explain that to my mother. It's not going to happen. So, I think what often happens with people like yourself, myself, and probably everyone listening to the show is that we like to play at the front. Like, we play, they always say there's the bleeding edge and the cutting edge, and we're probably somewhere stuck between all of them. But the mass adoption doesn't take place until it's easy. And there's a beautiful metaphor of the internet, and it was only when the Netscape user browser came out, that people actually really started to adopt it at scale. Because before that, you had to be a programmer. And I think when it comes to Facebook and banking, it's probably going to be one of two things. If it's really easy, then I think people might actually use it, particularly the unbanked around the world. There's 2 billion or 3 billion unbanked people. And if you've got no bank, like, well, why not? If it's really easy to participate. And if that's the case, they're going to have a market cap that will be tremendous. Because again, if you want a bank account and no one's giving you a bank account, then they're solving a problem that you don't even have access to start off with. For you and me, if we're trying to weigh it up against our traditional bank, we're going to be like, well, we've got all this hassle and it's expensive, but can we trust it? And so we might test it a little bit. I don't know.
I don't know. My view is that I think I agree with you. I think people would
I'd
use
invest
it.
in Amazon as a bank before Facebook as a bank, but that's a separate conversation.
But this is my point, right? If you had to, let's do it by a show of hands, okay, with our live studio audience. How many of you would prefer to invest in Facebook or bank with Facebook versus, say, any of the big 5 banks here? Hands up. So none of you would bank with Facebook. Seriously. I'm shocked by that.
Yeah, I'm quite shocked by that.
Seriously.
Especially considering the age of the room, basically.
Just put your hands up. Are you sure they're working today? That's unbelievable.
Yeah.
Just shows you how wrong we are.
No, well, then again, I come back to money is an interesting thing, money and trust. It's people are like, oh, it'll be wonderful and we're going to change the world. And I think that's what a lot of the RCOs have found out, that it's quite so easy to get people to part with their money,
So hang on, why though? Why wouldn't you bank with Facebook? So give Chris a mic here. He's going there. What's the reasoning for that?
I think it's a big social perception, right? It's like we associate Facebook with like a social media kind of thing, right? And that's great for communicating with my friends, sharing a message. But as soon as you start talking about money and trust, Facebook is not the first thing I think about. I just think it's within the realm of what they do. Like, so I think of F&B, and I think, okay, cool. Well, they work with money. That's their business. You know what I mean? I would trust them more because that's their business. If I went to F&B and I was like, cool, I really want to do a social media campaign, that wouldn't really be my vibe. You know what I mean?
Interesting.
Yeah.
Well then, on that bombshell. Let's play the Injustice League. So what is one injustice that you see in the world that you feel really needs to be, taken down by the knees?
Yeah, look, I think I've probably already answered this. For me, I believe that what we're getting taught in terms of financial education and the financial industry in general is despicable, quite frankly. And I think guys like Tony Robbins have tried to come out. I don't know if you've seen his books, the last 2 books, Money Revealed, and those books. It's unbelievable. 96% of funds don't even beat the 10-year average, the market average. And yet they charge you all these fees and everything else. And I believe there's a massive injustice out there that, for some reason, and then all the regulators tell you to go with all these financial products, and yet they're statistically failing all over the place. And when they fail, no one does anything about them, but they keep stopping innovation in the space. So for me, whether it's around financial education or financial inclusion, I find it horrendous. I really do. And there's a great series that's just come out right now. I'd recommend people go and Google it, called Money Revealed. Robert Kiyosaki and a whole bunch of other people are part of that. And literally they've deep dived into people actually understanding how this really works. And I can't understand why in school we're not taught about money. It doesn't make any sense. The one thing that's going to be material to every single person, and you don't learn anything about money, but you learn about history and languages and geography. You know how the weather works, but you don't know how money works. It makes no sense to me.
We're going to come back to that point. So Maverick's got you a nice little something here, a nice little gift from us here at Soul Digital Kung Fu. And then you can just drop your mic and then pick up one of these here bats. And then as you think about financial education or incorrect financial education, how that sucks for the most ordinary people, you can just have a go at this thing. Just let rip. Just
I might break your table.
No, just go. Oh yes. He hates that. Look at Sanal's face. Hello. Yeah, see, she shat herself. Shame. Speaking of financial education, you've just launched a university, haven't you?
Yeah.
Can you walk us through that?
Yeah. So again, most people, when they think about money, it's this big scary thing, and basically the industry has taught us you don't know what to do, so run away from it. Go and see a financial planner. They know everything. They'll help you out. And I think it's complete bullshit, quite frankly. Like, I think every one of us knows what's good for us. When I used the medical example, was there one person in the room here that didn't make sense to? Like, it's common sense. Like, money is often common sense, but yet, people don't use their common sense. Common sense is not that common. And so for us, when it came to the Wealth University, we wanted to empower people, to give them the knowledge and the belief, and then they can decide what they want to do with their money. And so we've not only with myself, but with many other very qualified people around the world. And again, not someone who's a PhD lecturer, someone who's actually done it. Really important. If you want to be successful, go copy successful people. And so people can participate. There's free courses. There's a whole bunch. Quite frankly, nowadays, the excuse that you don't have access to stuff is it's rubbish, because we've got micro degrees. People can go and do it all there for free, and then there's also paid for courses that people can go and do and get access to communities so that they can learn and grow. We've got what we call the inner circle. So if you didn't get to go to Harvard or Stanford, tough. It doesn't matter anymore. You can join a global inner circle and be part of great people.
And this is on, where do you go?
It's all on the
that?
wealthuniversity.org.
Oh, wow. So it's actually off wealthmigrate.com, right?
So wealthmigrate.com. I tend to, the metaphor I give you is that it's like a hot air balloon. The Wealth University is like the hot air, and it's driving and people can grow and learn. And Wealth Migrate is like the basket. Not everyone's people are going to get knowledge and learn, and not everyone's going to invest through Wealth Migrate. They might go and invest in other platforms. It's fine. I've got no problem with that. So wealthuniversity.org is the learning, and wealthmigrate.com is where people can take action if they want to take action.
So there's no catch, basically. So you can do the university gratis.
100%, yeah.
Okay, so you don't have to.
No. To be honest, we just want to provide you with a solution. So
I love that. I love the fact that I've just seen this so often in like super successful companies and just entrepreneurs in general, is where we do this, or we're doing this now. Where you have to drive the ecosystem. It's like, it's not all for profit. Do you know what I mean?
Oh, 100%. Well, we've actually got 4 parts to our ecosystem, so I've only told you about 2 of them.
Oh, excuse us.
Yeah.
Like in 3 and 4 here. Come, let's go. What's number 3?
But it's important, because you talk about ecosystems. It's really important to take into account. The third part is the wealth movement, which for us is the big picture purpose. We want to empower 1 billion people. And where that comes from, if you remember, I said to you 12.9% of the world's population has access to property. That's roughly 1 billion people. We basically said, well, in our generation, why can't we double that? And so the wealth movement, and there's 3 legs to it. It's empowering children with entrepreneurship education. It's empowering women with access to financial inclusion. We've got a whole thing called Women in Wealth. And then actually allowing everyone access to wealth, through technology. And that's our big picture why. That's our big picture purpose. And then we haven't built it yet, but one day we're going to launch Wealth Create, which is ultimately where we'll let people with $1 be able to invest. But that's a couple of years down the line.
I'm going to put you on the spot. I was going to say, when is that likely? If you were just to, ideal roadmap, when is that likely to happen? Whether I own $3 a day and I can put $1 into a property investment.
So look, if you'd asked me 5 years ago, I would have told you it would have happened already by 2020. So I'm a bit scared to guess nowadays. But I'll tell you why. It's not a technology problem. The technology exists. What's much more difficult is a regulatory problem. So there's a whole bunch of regulatory hoops that we've got to try and jump through to comply. And to jump through those hoops all cost money. And like a simple thing like KYC, okay, like generally these online integrated KYC things have a fixed fee per KYC. So if you're investing $100 and the fixed fee is $1, okay, that's maybe makes sense. But if you're investing $1 and the fixed fee is $1, like it's quite hard to show you a return. Do you see what I mean? Yeah. So these are the friction costs that we haven't been able to figure out how to get our head around. We will solve it. And again, I think blockchain and crypto will actually be the way that it goes ultimately. But I'd like to say in the next 5 years.
We shall see. Cool. Just a couple more things. So quote of the day. Take us through this one.
I don't know where I first was told that by Zig Ziglar. You can have anything you want in life if you help enough other people get what they want. And you can see my handwriting. I was not meant to be a school teacher.
Much better than mine.
But for me, it's a beautiful saying, and I'll repeat it just so that people can hear it. You can have anything you want in life if you help enough other people get what they want. Now, to come back to your comment from 5 minutes ago, you said a lot of people are driving ecosystems and entrepreneurs are giving stuff away for free and everything else. Well, it all ties into this. Because if you're helping people, why are you doing the show? You're helping people, you're adding value to their lives. And by doing that, you are benefiting. And what I love about where we are in the 21st century is that Mother Teresa had to go and live in complete poverty in India and, help people and, whatever. And basically give up all her worldwide wealth and everything. And what I think is so beautiful nowadays is you can help people and you can create value at the same time in terms of that big picture. So for us, that's the basis upon the Zig Ziglar thing. And, we talk about wanting to empower 1 billion people. We'd like to believe we're a very purposeful company, but we're also a profitable company. I believe in capitalism, and I believe if we empower 1 billion people, we'll build a valuable company. And so it's a win-win situation. And just to be clear, because we're not trying to be Mother Teresa,
No, why would you?
And by the way,
should you? She's taken.
But also, by the way, if you are a profitable company, you can actually do a lot more. Take Salesforce as a good example. I think even some of the other ones, Google and them, they've all done, wonderful things for the world. And but you need to have capital and resources to be able to do that. So,
Scott, let's wrap this up. Why do you do what you do? What gets you out of bed in the morning?
Yeah, I suppose for me, it goes back to you spoke about those London days. I just realized so many people want to participate in property and just don't have access, don't have knowledge. And, through IPS, I realized there was a massive gap in the market. The majority of people didn't have enough money even for the deposit. If they did have enough money for a deposit, they often wanted to get into commercial and couldn't get into commercial. And then finally, there's actually a whole sector of people that have a lot of money and don't even know how to do it anyway. Which country to invest in. There's a hell of a lot of people living in South Africa, China, whatever, that want to invest in America and got no idea, or England, don't know how to do it. So what gets us out of bed in the morning is the ability to empower people, to inspire them, and to basically help them achieve their own freedom. And what I believe when it comes to money is that I don't really care what you want to do with your money. I don't care whether you want to send your kid to a different school, go live in a different country, give money to the church. It doesn't bother me. What I care wholeheartedly about is you having the freedom to make those decisions. And so what gets me out of bed in the morning is to inspire people to take control of their lives and to set themselves up to invest in good stuff so that they can have the freedom later in their life. And
Scott Picken, everybody.
Cheers.